Hello, Dr. Trader is back. The euro against the US dollar begins this week with a direct contradiction. The framework holds a medium conviction bearish bias, but price and multi-time frame structure have not confirmed it. At the locked publication quote, the pair was near 1.15824, effectively on weekly VWAP and still more than 50 pips above weekly TrendSL. The question is not simply whether the euro can fall. It is whether sellers have evidence that the timing is right. The trap is turning a reasonable macro argument into a premature short. Elevated U.S. real yields and the Federal Reserve versus ECB rate gap can favor the dollar, but the market has not yet followed that conclusion. The euro-dollar pair remains above TrendSL, while daily, weekly, and monthly structure still lean upward. Selling here is not only a bet on direction, it is also a bet that technical confirmation arrives immediately. Those are different decisions. The intermarket picture is split. The U.S. 10-year real yield stands at 2.44%, which can attract demand toward dollar assets and weigh on the euro against the U.S. dollar. Yet recent U.S. data softened at the margin. Third-quarter GDP now was revised from 4.3 to 4%. July industrial production rose 0.2%, below the 0.3 forecast, and pending home sales fell 2.3%. The dollar is therefore range-bound as markets price a more dovish Fed response. That brings us to the price map, where two lines have different jobs. Weekly VWAP is 1.15821. Price is directly in that equilibrium zone, leaving short-term momentum unresolved. Weekly TrendSL is 1.15282, roughly 54 pips below market. That active gap means structure still conflicts with the bearish thesis. Only a weekly close below TrendSL would align the technical structure with the bearish call for the first time. The nearest catalyst is the FOMC meeting minutes at 1800 UTC on August 19th, according to the Forex Factory calendar. A firmer policy message and rising real yields could restore dollar support. A softer message could pressure yields and increase the risk of a squeeze higher in the euro-dollar pair. The headline alone is not enough. Watch which side of VWAP price accepts after the release, and whether that move survives the first reaction. From here, two paths matter. The bearish case receives structural confirmation only through a weekly close below TrendSL at 1.15282. If price remains above that line and rebuilds momentum over VWAP, the bullish structure stays intact and crowded shorts may add fuel to an upside squeeze. VWAP separates short-term momentum. TrendSL defines structural confirmation. They should not be treated as the same signal. The practical decision is to wait for evidence instead of shorting a label. The 3-week bias remains bearish, but the chart has not agreed, and VWAP is now the battleground. Traders without exposure can watch the post-minutes reaction and the quality of the weekly close. Anyone already positioned should manage risk through a personal plan, not treat these analytical levels as trade instructions. Follow Intermarket Edge for the next price map and intermarket update.